Kingsley, how are you?
Very good, thank you.
Good. Welcome to the Block by Block podcast. Appreciate you taking the time. So tell us, who is Kingsley Advani?
Sure. Um, I'm very early in crypto since 2011. I've been, you know, coding since I was 11 and have always been a bit of a hacker on the good side. And I think I got my first computer when I was about 5 or 6 and was always pretty into technology since a young age. And I randomly discovered Bitcoin in 2011 through my friend, and I was pretty fascinated at how you could decentralize money. And wasn't until 2013 that I started investing, and I was working as an intern at the time at IBM. Had some savings, and I just started investing my savings. And then I think we met in 2017 in an investor group on Slack, and
Yeah.
we were investing in ICOs. And through that group, I made my first million. I was 24, and
Wow.
I saw the potential for group investing and for investment groups that could invest in any type of company with small check sizes. So you didn't have to invest millions. You would have people investing millions, but you could start with 5K, right? You could start with 10K, 20K. And one of the deals, Zilliqa, I put in 50K and it did a 50X. And I was really intrigued at how you could come together as a group and invest small checks together and have big outcomes.
That's amazing. I want to get into a couple of things that you mentioned there. You started coding when you were young. Can you remember any of the first initial programs that you built? Was it a
Yeah,
game?
definitely.
Yeah, tell
Yeah,
us about that.
I was big into AppleScript back in the day, and I would make different tools in AppleScript, and I was trying to make money when I was like 11, 12, and I started selling Xbox Live subscriptions on eBay, and I set up my own online store, and I had to email the client the code every time they bought, and so I built a script with AppleScript to check the PayPal confirmation and send the code to the buyer once they had bought the code. And
That's
it was
amazing.
good until we had a lot of scams, scammers trying to gain the system. So I had to build fraud prevention into it. And this was like back in, I think like 2016, 2017. No, sorry, 2006, 2007-ish. So like very early on, PayPal was starting to really thrive. eBay was doing well. And so, very early on, I was building my own software.
That's amazing. As I get older in my career, I've realized that that type of hustle and entrepreneurship is not common. What do you think led or drove you towards that? It sounds like you've been entrepreneurial ever since you were little.
Yeah, I mean, I had to make my own money. I wasn't given I had to, I had to make my own money. And it was, partially, I wanted to go see my grandparents overseas. And so I actually was saving up to get tickets to fly, see them in Australia. So I think it was like trying to make my own money. And I guess I've always been pretty driven from a young age, but having the internet and being able to learn how to code, it was big leverage to make money.
That's cool. Is that something that your parents instilled in you or encouraged?
My mum bought me the book on AppleScript, which was nice. She's a teacher, but she has, to this day, she doesn't really, she's not an expert at computers, right? So it was mostly just me reading the book, figuring out how to do stuff.
Yeah.
But I did spend like a lot of I used to skip school sometimes just to build my business, and it was like long weeks and weekends, and the weekends I used to just spend coding and stuff. So it was definitely like the 10,000 hours to mastery type stuff.
I love hearing stories about that. I read something the other day about how parents these days they do their kids a lot of disservice. And one of the examples that I read was like starting an orange, for their children. They make that first cut, and then the child kind of learns how to peel the rest of the orange. That's actually, for a lot of kids, that turns out to be a negative thing, because then they learn not to peel their orange, then they expect their parents to do it every time. And I'm seeing that a lot, as a dad. I'm seeing that some of that in my children. Are there things that I'm doing for my kids that's actually not going to help them in their future because I'm doing too much? It sounds like your parents had that balance between letting you kind of learn on your own and encouraging you to venture off and study. And I think that's pretty cool. And it's been something I've been thinking a lot is, am I doing too much for my kids? On that topic of growth, like how do you think about growth in your personal life?
Yeah, I think, I want to be excellent in all areas, right? There's, relationship to self, there's work, there's home, family, relationships, family, God. So you want to have excellence in every area, physical health. So I definitely like score myself on a weekly basis, and, I track how I'm doing. I think recently, like at least this last year, I've been focused on home, relationship to home and having a good foundation. Definitely, I notice if there's some area that's struggling. If you're, when I was living overseas before, I wasn't as connected to family. And so the last 12 months, I've been focused on family as well. So I definitely think about my life in different areas and want to have excellence in every area.
That's amazing. You are the founder of Allo. So tell us what Allo is, and maybe explain it to the audience in two ways. If you can explain Allo to your mom, and then maybe explain it to a native crypto audience, like what those two versions sound like. And then let's get
Oh,
into
yeah.
it.
Yeah. So with Allo, we want to make it easy to launch funds. And the context of this is I've launched 30 SPVs and funds of my own. So I've learned a
What's an
thing.
SPV?
SPV is a fund with one investment.
Got it. Special purpose vehicle.
Special purpose vehicle, yeah. So you could raise a fund to invest in SpaceX or OpenAI or really any asset. And so in our investor group that we met in 2017, we were doing a lot of these SPVs where we were investing, 5K, 10K, 50K checks each, which aggregated to, 500K, a million, 2 million, and would invest into a company, right? Whether it's a crypto company via a SAFT or whether it's into SpaceX, via a secondary. And so I saw I saw this opportunity for SPVs back in 2017, 2018, still when it wasn't a very public discourse about SPVs. It was more of like a private thing. It was seen as kind of shady, and you wouldn't tell someone that you were doing an SPV. And I thought, I really want to master this and get good at it. So we actually launched a Web2 business in 2019 called Allocations, and it's scaled to top 25 fund admins in the world by number of funds. So it grew very quickly to over 1,600 private funds, over 20,000 high net worth investors, and over $2 billion in assets. And so I saw this potential not just for us in the group to run SPVs, but for for everyone in the world to be able to launch SPVs. And so with Allo, we saw the opportunity to not just launch funds, but launch funds on chain, right? We saw this opportunity where you could invest in funds via stablecoin, and you could distribute funds upon liquidity via stablecoin as well, where you could have everything transparent on chain. So you could see the expenses being spent out of the fund. You could control the fund via multi-sig wallet with your partners. And so really that's Allo and our visions to make it very easy to start funds on chain.
Gotcha. It sounds like that would make sense to, I think, to most people that are currently working in crypto or investing in crypto. What about to your mom during the holidays? So, son, what are you up to? How do you explain Allo then?
Yeah. My mum's a bit of an anomaly because I got her into investing as well the last 5 years. And
Okay,
she's
maybe
actually,
explain it to my mom then.
okay. Yeah, so when you launch a fund, whether it's a hedge fund, a real estate fund, a fund to invest in, the stock market, it's usually can take, 6 to 12 months. It can cost, 100K to $1 million to launch. And so really with a blockchain where you have, instant settlement, you have decentralization, you have low transaction fees, instead of taking 12 months, you can do it in 12 seconds. And instead of costing $1 million, you can do it for, zero point 0.1 cent. So it's orders of magnitude cheaper, orders of magnitude faster, and it's a very secure, very trusted technology to launch a fund to invest in any type of asset.
Okay, that's amazing. I'm intrigued by the interplay between allocations. Is it allocations?
Yeah, allocations.com as well. We own both.
Got it. So allocations and now allo. And
Yeah.
how do those two work together?
Yeah, so it's very important to be able to launch funds on chain. You need to have done it in the Web 2 world, right? And so with allocations, we've been building this infra for 5 years, right? We've onboarded over 24,000 high net worth investors. We have the KYC AML. We have the US regulated licenses, broker dealer license, crowdfunding license, ATS license, exempt reporting advisor. So if you want to get good at RWA or funds on chain, you really have the Web 2 knowledge as well. It's very difficult to start from scratch. And so for this bridge from Web 2 to Web 3, there's $900 trillion in real world assets, and it's not going to all go on chain tomorrow, right? There's this bridge that we have to get through with KYC AML, with the entity creation on chain, with the legal documents on chain via smart contracts that after building allocations, I felt that we were very well positioned to launch Allo, which is, building funds on chain in a real world asset kind of environment.
Gotcha. Let's get into. I'm really intrigued by this because the topic of real world assets is a very big one. And so maybe explain to us what that means
Yeah,
and Allo's kind of role in helping make that happen.
definitely.
I think
Yeah,
there's a lot of excitement around RWA,
yeah,
and I'm quite excited about it and the potential. And so help our audience kind of better understand what that means and the potential
sure.
and Allo, what Allo is doing in that space.
Yeah, so real world asset is a financial asset that can be put on a blockchain, right? So if you think about there's $900 trillion of real world assets, there's $330 trillion of real estate, about $300 trillion of debt, there's about $150 trillion of money supply. So there's a lot of kind of big assets that are not on chain. So the RWA movement is taking these assets that are not on chain, putting them on chain, making them programmable, enabling trading, enabling lending, enabling staking, enabling simple investments. So I think it's a huge potential industry, and I would say that Allo is well positioned to be one of the top RWA projects in the space.
It sounds like it. And so let's maybe go through the like a workflow. So let's say I own some real estate that, and so would I first work with allocations and then allocations, then how does Allo work with the special
Eventually, you'll
purpose?
be able to set up a fund, tokenize it all on Allo on chain, right?
Got it.
So today on Allo, you can set up a real estate fund. When I say fund, it could be an SPV, it could be single asset or multi-asset. And the reason why we started with launching funds is because any RWA tokenization, it really starts with the entity, right? So how is it how is it structured? What are you putting that asset into? The long term goal is having these $900 trillion in assets on chain in title deeds, right? So at the government level, but really that will take a while. So our approach is to tokenize these assets into a SPV, so into a entity that we can control. We can control the trading, the lending, whatever happens in that. We have multiple jurisdictions like Delaware, BVI, Cayman. We can support any type of jurisdiction. But first, you need to create a fund, whether it's a single asset fund or multi-asset fund, before you acquire those assets, before you put those assets into the fund.
And that's where I would first work with allocation.com.
You could start on Allo.
Got all on Allo. Got it. Okay. So who are the various kind of customer segments that you or stakeholders or entities that you work with? And
So
kind of what are their various needs?
Yeah, we have about 24,000 high net worth investors. And so they've invested in over 1,600 private funds. And it's clients that come to us are typically emerging fund managers that are typically sub $100 million in assets that want to launch a fund to invest in different types of assets. So
you've got the fund manager who starts the entity, right? Okay, so and they manage some kind of asset or a fund, and then they put it on chain through Allo.
Yeah.
And then what?
So
what are they seeking to do when they do that?
Yeah, so fund managers want to start funds and raise capital and deploy capital. So we make that whole process very simple, very efficient. Initially, a fund manager wants to set up their entity and fund, so they have a vehicle to raise capital. And then they want to be able to raise capital efficiently. Before we started Allo, we saw the huge growth in stablecoin adoption on allocations. And we saw that, I think it was like for 20% of the funds being raised, they were using stablecoin. So really, for a fund manager, you don't want to be restricted by, FedWire or traditional US banking regulations. You want to be able to raise in stablecoin on a Saturday or Sunday. That is, legally compliant, and you should be able to accept stablecoin if you want to raise a fund. And so we've been running that for years, right? And so eventually funds could be entirely raised in stablecoin, right? If you think of an on-chain fund, you could have the whole thing raised in a US stablecoin, but also we have some partners launching other types of stablecoin, like Hong Kong dollar stablecoin. One of our recent investors is launching Hong Kong dollar stablecoin. You have Euro stablecoins coming soon. You have AED stablecoins coming soon, so from the UAE. So really, you can imagine these funds entirely raising capital from stablecoin.
That sounds exciting. In terms of, there's been a lot of excitement in the United States around, President Trump winning and pro-crypto kind of stance that he's taking. How do you see the regulations in the US kind of changing to be more favorable towards Allo?
I think we'll see orders of magnitude better governance with the new administration. So I think just by having, a government that understand crypto is a good start. And I think we'll see a lot of stuff improve.
Yeah. What are some things you think will improve and
I think
help
the whole
Allo?
debanking thing was pretty bad, where how crypto companies, crypto clients, and just general crypto investors got debanked. That would never happen again. And so I think strengthening banking for fintechs and for crypto companies in the US, I think will be very important. I think there'll be less bureaucracy. I think it will make it easier to start funds as well. I think the accredited investor test will improve over time as well to be more relevant to recent times. I don't see how someone can gamble money at a casino. They could gamble, 100,000, but they can't invest 100,000 into SpaceX. So I think the accredited investor test is likely to be extended to, say, for instance, just an online quiz, right?
Yeah.
So that would open up investing to a lot more people.
That example you give of someone being able to gamble money but not be able to invest in an entity like SpaceX. How do you think that came to be, where it's so laxed on the gambling side, but on more regulated things, like it almost becomes overregulated, like, and prevents normal people from potentially making great returns on their investment?
Yeah, I think it's just the government cycles that we've been in an era of overregulation and bureaucracy and like layers upon layers. So we've reached the end of that cycle finally, and we'll start to revert to more efficient governance.
Yeah. I hope so too. I hope with Elon and Vivek, we're leading Doge, that's going to just open up markets and really just free up the really free enterprise,
Yeah.
which has been kind of
I
strangled.
read, just an example, I read something like the IRS spent something like $46 billion on more enforcement cost, right? But they only brought in 1 to 4 billion more. So they
Yeah.
spent 10x more on expense than what they actually brought in.
I hope some of that gets taken care of with Elon and Doge and the rest of the
Yeah.
administration.
Yeah.
Tell us about Allo
5 years. Yeah. Yeah.
And then Allo is quite new to the space. How is it doing so far in terms of some of the growth metrics that you follow and track and care about?
Very good. We have over 100,000 wallets and we have over 700,000 community members. We were in the Binance MVB program, or BNB Chain MVB program, which is
Nice.
incubation program. And so we've been doing very well, and you'll see some things launching pretty soon.
Being part of the Binance MVB program, does that mean you need to launch on Binance Chain also?
Yeah, we have launched some of our products on BNB Chain. It's like a 5 to 10 round process, and
Okay.
we were one of the winners of the BNB Innovation Academy.
That's great. Congratulations.
Thank you. Thank you. But it's been very good, the whole program, learning from their team, from their partners, and just, learning how to list successful projects.
Yeah. I remember in a conversation we had a while ago, you wanted Allo to be an app that's just as easy to use or even easier than Uniswap or these dexes, right? As an app, on which chains is Allo? Where can you find Allo right now?
So we're chain agnostic.
Okay.
You can go to allo.xyz. We have a few different products. We have the ability to launch funds. We have Bitcoin staking, which we added. We've staked over $50 million of Bitcoin through Babylon.
Wow.
So we have support for multiple different chains. The idea for WA was you should be able to support multiple chains because there's different pros and cons to each.
Yeah. So it's chain agnostic. So allo.xyz.
Yeah.
Chain agnostic. You can find it on multiple chains. What's your strategy for which chains you'll support? Because I imagine going to new chains requires some decision making. How do you decide which chains to
I'd
go
say
on?
it's mostly speed and cost. That we want people to be able to launch funds in less than a few seconds. So it needs to be very fast. 10 seconds is too slow. So it needs to be like ideally sub a second. Because if you imagine you're running a fund, you want to, sign off an investment, you want to distribute capital, you want to add a team member, you want to invite an investor, that they should always be very fast. You shouldn't be waiting around. So it should be, we want to get very fast speeds. Secondly, transaction costs. If you imagine a fund running on chain, you have lots of transactions that if each transaction costs $2, $3, $4, it's, a bit of a waste of money. So you want to be able to have transaction fees in the cents or less than a cent.
Gotcha. Now, so RWA, it's in the real world asset tokenization, capital formation space. So if I create a fund on Allo, how do I deal with returns to investors? How does that work?
Yeah. So if you're a hedge fund and you're distributing capital constantly, we can set up stablecoin distributions to clients. And that's definitely a more complex one if you want to distribute capital every day. What's publicly available is different too in beta mode because, most funds on our platform have been just typical invest and hold. But setting up like high volume crypto funds where you have maybe daily, monthly, quarterly distributions are much more complex, but we will be able to support that in the coming year.
There's a lot of projects that are entering the real world asset tokenization space. Who do you consider competitors?
Yeah, so Chainlink, they're at about $25 billion FDV, and they're building an Oracle network and specifically working with real world assets. So we've actually partnered with Chainlink, but I think they're providing a lot of kind of Oracle attestation identity network. For us, we're building the fund admin layer so that people can actually build funds on top of us. Another big project is Mentra Chain. Today they're about $6-7 billion FDV, and they're initially focusing on on-chain title deeds for real estate. Compared to those two projects, we have a lot more TVL. We have $2 billion, over $2 billion in TVL, and we have a lot of TVL in the pipeline. Ondo is another project. I think they're at about $10 billion plus FDV. So they have two funds on the platform that are, US Treasury bill funds. And for our clients, you could launch an Ondo on our platform. That we're really the picks and shovels to build these types of products. That we're an infrastructure layer where you could build 1,000 funds like Ondo. Right. So we feel our infrastructure is the best in the market, and our clients could do very big projects on top of our infrastructure. And actually on the Web2 side, we've launched funds to acquire football clubs in the past, to invest in rare violins. We've done over 10 SpaceX SPVs, done OpenAI, Anthropic. So we've seen our clients build big things, and for Allo, I think the opportunity is even bigger because you have, a whole space of $900 trillion of assets that you can bring on chain in, less than 60 seconds.
Within the crypto in general, there's buzz around real world asset tokenization, but I haven't heard a lot about specific companies that are doing RWA. For example, I wasn't aware Chainlink was doing anything around RWA. I know that they provide real world data to on chain and they bring it on chain. But I guess who are the main customer segments that will be the biggest driver of growth for Allo?
Yeah, I'd say it's like the crypto angels and the crypto VCs that set up SPVs and funds. That we already have a lot of them on our existing platform. In terms of our growth, we're working on a few acquisitions that will 10 to 100x our growth anyway. So it's mostly the crypto native funds and crypto angel groups, similar to Cluster as well on the angel group side, that they launch many deals, many investors, there's many payouts, distributions. And so I think, mainly on the crypto fund and angel group side.
Gotcha. So as you're describing that, I'm thinking of kind of an angel list, except it's all on chain. Is that one way to think about Allo?
Yeah, you could think of an angel list on chain, but we don't just support venture capital. AngelList just supports venture capital and mostly US VC. From the last 5 years, we've supported investing in any type of asset. So all $900 trillion of potential real world assets.
As a team, as you think about like which assets to tokenize, do you prioritize which assets make the most sense right now, like real estate or US treasuries?
Yeah.
How do you think about that?
Yeah, we're giving our users the tools to tokenize whatever they want, right? So we're giving the picks and shovels to people to launch funds that can tokenize any type of asset. So I think we'll be surprised with the types of stuff. We had a client that wanted to tokenize some olive trees in Europe, which is quite funny. I hadn't thought about tokenizing olive trees. So we have some pretty random stuff. So we don't care. We just give people the tools and see what they build.
Yeah.
That being said, I think that you asked about liquid crypto funds. I do think that investors want to get yield and they want to get paid out soon. So generally, I think assets that have cash flow can be pretty interesting as well, or more liquid.
Yeah.
So for instance, SpaceX, on the trading side, it does have a pretty active trading market. And on the yield side, assets like treasury bills or some real estate assets or even crypto funds or DeFi funds do have more yield. So I think assets that produce more liquidity can be more interesting to the crypto investors.
That makes sense. You mentioned some of the clients have raised some capital to buy rare violins, or even olive trees. That's quite curious and a really neat use case for what Allo is, the potential for Allo. How does that work? Let's say with if I wanted to buy a rare Stradivarius, so I work with Allo to and I try to raise money so I could buy this thing. What does that whole thing look like? Because I mean, it's a really great use case.
Yeah. So they actually were buying and investing in Stradivarius.
Okay.
Yeah, they just basically go on the platform, they launch a deal, we set up the entity typically in Delaware, and then they, put how much they're raising, the target close date, and then they put in the deal memo, so the description of the asset, and then they get a invite link, they invite the LPs, and then they invest. And then they close the SPV, wire the money out to acquire the asset, and then upon distribution, we distribute the capital from the SPV to the investors.
So if I want to buy Stradivarius, I raise capital through Allo, and then I buy the Stradivarius. Do the LPs receive notification that I really bought it? Like, what's there to? I guess how does that communication work?
Yeah. So it's private group. So you're not raising from some random investors. Investors aren't investing in random fund managers. We've been pretty private the last 5 years that you already have your investor group. They already trust you. We're just giving you better tools to raise from them, right?
Got it.
You're not investing in random fund managers. It's people that you already know, but it's a more efficient way. And then on our platform, you need to upload the information about the portfolio company and ultimately the portfolio company signing paperwork. So the legal agreement to acquire the assets.
I see. Okay. That makes a lot more sense to me.
Yeah.
Okay.
But I will say that whole industry for RWAs, the proof of asset is very important. I think I'd love to see more built out on that side, just generally in the industry. That's a huge opportunity for proof of asset and proof of attestation, because if you imagine $900 trillion of assets moving on chain, the proof of asset, the proof of provenance is very important.
How would that work for the proof of asset for the Stradivarius violin?
Yeah.
Is it just purchase receipt that I would then upload, or?
Yeah. So I think the long-term opportunity is zero knowledge proofs. So without disclosing the name of the seller, for instance, let's say we did a SpaceX SPV, we bought the shares off an employee. The employee doesn't want, his name on chain, right?
Mm-hmm.
So I think the opportunity to leverage zero knowledge proofs to show that the asset was provably bought, but not revealing who the name was. So I think that's very important for the space, because for real world assets, you don't always want to disclose who the seller is, but you do want to disclose that it was legitimately purchased.
Yeah. I think for securities, there's a pretty healthy infrastructure, but for collectibles like a violin or even, olive trees, which are innately valuable, but how do you get that on chain? I think that's a really interesting piece of infrastructure that I'd love to learn more about.
Yeah. Well, for olive trees, you'd have like the land title deed, right?
Oh,
the
yeah.
land parcel,
Okay.
you'd have. So eventually, at a registry level, those assets will eventually one day be on chain, right? So if you think the government level, when the land registry, for instance, for property, or the real estate title deeds, that eventually that will be on chain. But before then, as the fund admin, which we act as well, we verify that they're actually purchasing legitimate assets, and we haven't had any issues for the last 5 years, because I think we're not publicly soliciting capital from investors. Investors only really invest in fund managers that they trust anyway. So we're just providing the tools to fund managers and their investors to better raise and deploy capital.
Yeah.
For that reason, no one's going to invest in a random fund manager. It's someone that you've trusted over, many years.
So these are fund managers that already have existing relationships
Exactly.
with liquidity providers or LPs.
Yeah.
And then they use the Allo infrastructure to raise their capital and distribute capital.
In our investor group cluster, we're both part of. In prospects channel, when people post deals, when you see someone post a deal, the first one is, do you trust them, right? Have you done a deal with them before? And it's the same for raising capital, that you don't raise capital from random people. You invest people that trust you, that you have a track record with. So that's typically how you raise capital.
To someone just entering blockchain or crypto, it feels like such a dark art and so much to learn. How do you recommend people learn more about real world asset space, the opportunities?
It's a good question. I'd say, think about assets that you already have, maybe. Crypto assets, I would call as real world assets as well. So it just depends whatever you're interested. If you like real estate or debt or, money supply or natural resources or crypto assets, that just think about how they could be tokenized. And I think raising your first SPV or your first fund is very important because I think everyone who is an investor should also consider, if they invest with friends and if they're good at picking deals, they should consider launching an SPV or fund. Maybe 5 years ago, it was very difficult, but we've really democratized the landscape. And so if you're a good fund manager, you should be able to launch a fund, right, without all that complexity. I met a advisor of ours last week, and he said it's taken him 12 months to launch his fund, which I think is a scam. It shouldn't take you 12 months to, just from the paperwork side, right? The raising capital, if you're slow at raising capital, maybe, but the paperwork shouldn't take you 12 months. It should be very efficient to launch funds, and we should be able to launch a fund in less than 60 seconds.
And it sounds like Allo is definitely helping in that, be able to help people overcome all the paperwork strangulation. And it sounds like the infrastructure is going to be really helpful to people that want to start funds and raise capital. Now, I read something about Grant Cardone, who's a big real estate investor, and he's raising a fund right now that's going to be collateralized by Bitcoin to acquire real estate. Would someone like Grant Cardone be someone that you guys would work with?
Definitely. Yeah. So with launching funds on chain, I think the collateralization part is very interesting because, if the fund holds Bitcoin, it can borrow against that Bitcoin and invest in another asset. So we actually have raised a $100 million Bitcoin backed lending facility. So you'll be able to borrow against your Bitcoin, for instance. And so we think that lending is what unique applications can on-chain funds provide. Well, lending and borrowing is one of them. So I think that's a great use case, borrowing against Bitcoin to buy real estate, for instance.
Yeah, I think that's part of why this feels like such a dark art, is because a lot of these PV creators already have existing relationships with LPs. And most people don't know who these SPV creators are. They're well known in their little niche, but they're not well known to the rest of the world. And so if you look, for example, there's hundreds of hedge funds, but almost nobody knows what they are. Or if you go to their website, they don't share much information on purpose because they try to keep it private. But someone like a big name like Grant Cardone is very public about what he's doing. And I imagine there's probably other real estate people that are trying to raise big funds to acquire real estate collateralized by some kind of crypto like Bitcoin. What are your thoughts on working with big names and celebrities like that might be trying to raise funds to help Allo's brand awareness?
We're definitely open to it. I think the main thing is investor protection, that you don't want them to scam their investors, right?
Yeah,
so you
correct.
want, from our side, we've worked with security lawyers from the earliest foundations back, when we started the company. So I think that the celebrities have massive platforms. I think they can do tremendously well. And I think making sure they have the right investor protection, they're not over marketing or overselling what they're raising. I think if you provide safe infrastructure, then you can get good outcomes.
That's cool. Well, that sounds like a great place to end. Before we end, we'd love to, tell us some final words that you'd like to share with the audience around Allo and how they can learn more about Allo and even get involved.
Definitely. Well, we definitely want to empower more fund managers. I think you can go to the website allo.xyz. We've been a very efficient project. We have raised very little capital. We wanted to be very efficient and not wasteful. But you can ping me on Telegram at Kadvani if you have any questions, if you want to launch a fund or learn more. And thank you, Pete, for hosting this podcast.
Appreciate it. Thank you, Kingsley.
Thank you.